We're going to talk about account growth in this video. I'm going to talk about the 3 steps to account growth. I'm going to talk about why this environment, 2024, has been ideal for account growth. And I'm going to talk about why. The why is probably easiest. We're in an uptrend. And I haven't in a long time heard an uptrend of this quality as bashed, as top picked, as questioned as this one has been. Don't know why, really don't care. It's costing you money if you are listening to people who are constantly warning you about the next dip, keeping you from buying, or even worse, encouraging you to top pick, right? Those are things we don't want to do. Can we get that out of the way in the first 45 seconds? All right, let's focus on that. So this is the Sector Secrets Mastery. These are all alerts, all right? This is really a simple concept. When I put a trade out there, these are the trades that we're taking not only in the Sector Secrets Mastery, some of them are in the Simpler Central room. And then when I take the trade, I take the statement from Thinkorswim, and then I upload it into this thing called TradesViz. This is not about TradesViz. This is about use a piece of software that's going to look under the hood of your trades, right? So that's the P&L, but that only tells me a little bit, right? What I want to know is which days were troublesome days, which days were the outperforming days. What is the current win rate? Although that is not everything. If your win rate is exceeding about 75%, it is too high. You're taking profits too soon. And yes, it will cost you, right? So yeah, I can look at the cumulative P&L, but I'm really interested in these days here. I'm really interested in basically if I'm taking 10 trades, 3 of them should and are going to be losers, right? So we got to remember if we lose well, right, those 7 trades can grow the account. Okay, what else is this going to tell me? It's going to show me my win rate and my win-loss versus date. I don't actually necessarily find that super helpful, but it's good to know. But how many ways can I chop this up? And there's a lot of ways to do that. I'm not going to get into it in this video, but this is really to say I'm putting my money where my mouth is, right? This is the kind of year where I hope everyone is looking at their trades. And by the way, I don't mean slinging trades. You can see I'm not super active. These are all, by the way, either daily or 1-hour chart setups with overnight exposure, or what we just kind of call swing trades, right? I'm taking advantage of the swings in the market, and the swings for me are pretty much retracements, corrections, pullbacks, dips, right? Buy the dip. All right. And yes, this is going to be yet another video where I'm going to talk to you about why I am hoping you're focused on the long side of the market. But let's talk about where, because a lot of traders are struggling with, okay, Rog, got it. You've been saying all year long, buy the dip. We see that the trend is up, and where is it up? So let's talk about that. Number 1 is risk management. And I find risk management easier when I'm going with the flow. When I'm going with, in this case, the flow of an uptrend. Okay? There's nothing about trading, by the way, that's easy. It's our own biases. It's the terrible analysis that we're pummeled with all the time that's oriented to fear-mongering. It's things like neglecting risk management and not making risk management first and foremost. Those are the things that are hurting us. And those will always be things that are out there, right? That's the dark at the top of the stairs. That's the monster under the bed. But how do we better handle that? We focus on things that are strong. All right, so this is the first place I start. What are those sectors that are overall going up? SMH has been very volatile as of late, but it's still the number 1 performing sector out there, followed by communications, tech, financials, home builders, healthcare, industrials, energy, staples, basic materials, and this right here, XRT, that's your retail. What do we want to avoid? For the most part, in terms of longer term follow through, I'm not ready to commit to things like regional banks, miners, metals. Consumer discretionary is tricky. Amazon's trying to organize a little bit better. Home Depot is part of consumer discretionary, so that's helping. But let's stay where the strength is, because that's where the probability for follow through is. All right, so that's the top of the food chain. Even above this would be looking at these 3 sectors all mapped to the NASDAQ. Then if I go down and take a look at, say, XLF, XLV, XLI, XLE, these are going to map a little bit more to the Dow and the S&P, right? So whether it's QQQ, whether it's DIA or SPY you're looking at, think about what sectors are going to contribute to the movement of those indices, all right? So that's index sector. Now let's get to stock, all right? The last piece of the puzzle, if you want to look at it that way, is going to be, all right, how do I take an outperforming sector like XLI and see what stocks are aligning with that probability? This is it, gang. I'm laying this out. This is what I do day in and day out in the Sector Secrets Mastery, and every session that I do in Simpler Central. I'm going to be teaching you all how to do this in April, because it's killing me that traders are still spinning their wheels in this environment, and it doesn't have to be complicated, right? So if you want to mark on your calendar, a lot of folks have been asking, Rog, yes, I need an in-depth 4-hour breakdown of how you're doing this and the indicators you're doing it with. That's coming, but please absorb this, because this is in a lot of ways the preparation for that class on April 13. GE. All right, let's take a look at GE. Let's take a look at CAT. Let's take a look at Uber. Or another way to look at this is, what do I want to avoid? Avoid, right? Avoid. Definitely avoid unless you want to short, right? That's Boeing. What about financials? All right, let's crack open financials. And these are breakdowns that I give folks in the Sector Secrets Mastery. These indicators and these breakdowns will be available in the class as well. And I'm going to show you how to do the scanning, but you're getting a sneak preview of it right now. What have we been buying? We just took out some really great trades in Visa. This was a green trend. So this was when we got in green. Now, would I look to get in it today? Probably not. But what's still valid? Really easy. JP Morgan, Berkshire, Bank of America, Wells Fargo, right? American Express. Why did I pick those 5? I picked those 5 for 2 reasons. Number 1, they've got uptrends, right? But number 2, and this is something that will appeal a lot to a lot of traders. Everyone listening to me is going to have a slightly different account. There's small accounts and there are large accounts, and there's Godzilla-sized accounts and everything in between. If we can focus less on a large account approach or less on a small account approach and focus on a scalable approach, what does that mean? That the options that we're looking at have at least 500, greater than 1,000 open interest, right? So they're liquid. And I like to focus on options that are typically around $5 or less. Now, why is that? Because if I have plenty of open interest, a large account can buy 40, 50 options, no problem. A small account can buy 2, can buy 5. So it's not that there's a different type of trading approach if I have a small account versus a 7-figure account or a 5-figure account or a 6-figure account. It's how many contracts can I buy? That's scalability. When you get scalability down, that's actually the first step to understanding fixed bet sizing and risk management. All right, that being said, here's the breakdown of XLF. Now, everyone always wants to know, okay, Rog, but what about tech? If you're going to focus on tech, focus first on the SMH. And I would focus on SMH because in regards to scalability, this is a very affordable way to take advantage of so much of the strength that is in the SMH, the semiconductor sector. So I can just trade SMH calls when I get pullbacks in some of these key names, all right? And you're going to get a lot more bang for your buck because you've got that affordable premium and you've got plenty of liquidity. Awesome. Focus on SMH. By the way, it's great bang for your buck. Do you want to buy all 9 of the uptrends in this sector, or would you rather just get it all bundled, right? That's kind of what ETFs are, like a bundle. Okay. So then the next thing I want to do is say, all right, when do I want to buy it? I'm going to show you right now. Daily price movement ranges. When we have an uptrend and we have green candles, these beautiful green candles, and we hit the gray. A lot of you have been hearing, Rog, when the green meets the gray, what does that mean? It means this right there, okay? So those are the kinds of things we're looking at. We did this recently in Visa. We did this recently in American Express. We did that, and I'm looking at the trades in the Mastery right now. We did this recently in, let's see, Visa, Uber, American Express, GE, right? These are all recent trades. Am I going to have losers? Absolutely. We'll talk more about risk management. We'll talk more about entry zones and a little bit more detail about what it is that I want to do. We did a great watch list session today. I'm going to go through that in the premium video. If you want to join us on the other side, feel free to join us over in the Simpler Central or my mastery over at the Sector Secrets Mastery, which you can check out at sectorsecrets.com. All right. And if you want ongoing analysis, if you want a little bit more of an explainer, you want a little bit more hand-holding, cool. Come join me for Charts and Coffee every morning, Monday through Friday, from 9 to 9:20 Eastern at the Simpler Trading YouTube channel, my YouTube channel at Rogge Horner, or you can check it out at my Twitter or X, whatever they're calling it now, over at Rogge Horner as well. All right, that is a wrap. Hope that helps. Gang, this is the time to grow your account. We've got gorgeous uptrends. Use them to your advantage. Do not worry about the pullbacks, right? We're not buying at higher highs. We're not in those vulnerable positions. Wait for the dip in those relative outperformers. Play the probability. I'll see you in the next update. Hey traders, Rogge from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.